The management is represented by Mr. Prabir Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO, Home Appliance Division, Mr. Arup Das, Head Marketing Engineering Division, and Mr. Anand Reddy, CEO, Motor Division. I now hand over the call to the management for their opening remarks, post which we can take questions from participants. Over to you, sir.
Thank you, Chirag. Good afternoon to all of you. I welcome you all for IFB Industries Investors Call for the second quarter FY21. I trust all of you are safe and healthy in this trying time. We have with us Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. All of us are passing through difficult times. First quarter after lockdown was far from satisfactory. During the second quarter ended September 2020, the company has reported a total income of 717.64 crore, a growth of 3.3% over the corresponding period last year. EBITDA for the quarter was 84.74 crore with a margin of 11.8%, against 7.5% margin for the same quarter last year. We must mention that this is one of the best quarters till date, and we have achieved double-digit margin. However, because of supply issues, we could not fulfill market demand. For the year-ending period September 2020, company reported a total income of 1,000.31 crore, which is not comparable with the last year, as first quarter was affected by COVID. EBITDA amount for the period was 55.6 crore, with a margin of 5.6 compared to 6.1% margin first of last year. With this, I will request you to start the question and answer session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mitul Mehta from Lucky Investment. Please go ahead.
Yeah. Good afternoon, Ravi sir and Raj Shankar sir.
Good afternoon.
First of all, congratulations on a very good operating result. We've been waiting for this margin for quite some time, and finally, we've delivered on our promise. Now, if I look at the numbers, our other expenditure, which used to remain elevated in the earlier years and earlier quarter, have fallen from 172 to roughly about 150 crores. So large part of the saving has come from there. Now, from what I understand is that during pandemic, the traveling was less. You would have also saved a lot on advertisement. Just wanted to get your understanding on this particular headline cost overall. How far is this exercise sustainable, and how much of that would probably again get reinvested once the country opens up in due course? So wanted your thoughts, because that would be a clear reflection on the margin going forward. Second, also, if you help us to gauge some understanding on your AC business, what sort of volumes are we anticipating? Have we signed any contracts with OEs? And what sort of cost structure are we looking there from the gross margin point of view and from the EBITDA margin point of view? So can you please take us through these?
Mr. Chatterjee, would you like to answer the first part? Then I'll do the second part.
Mainly, we were right that we saved a lot of money on traveling because traveling was restricted, number one. There were issues on rain, other office expenses, service expenses, all those rates were substantially lower. and we took during the lockdown lot of cost control measures to see that costs are under control. These are the major areas actually.
But do you believe that these some of it may kind of come back and some may retain it? So how much you think we will be able to control these costs going ahead?
So Mitul, this is Rajshankar here.
Yeah.
Mitul, can you hear me?
Yeah, I can hear you, sir.
Yeah. So the positive results are basically on a couple of heads. Some of the heads are the ones that you spoke about in the area of savings on those other expenses. But there are basic savings also on the costs of the schemes and also in the material cost area. So the savings on the scheme heads and the material cost heads are savings that will remain going forward. We had shared in the previous call that there is a lot of work that we've initiated on the material cost heads that will come in play in Q3 and Q4. Some part of the other expenses, yes, will come back. So some degree of travel, etc., will reinstate, but some parts will remain. So reductions in areas like rental, etc., are permanent. They will not retain, they will not come back to the original levels. So I think the plus minuses and the fact that we have actually lost sales in this quarter because of supply chain issues on the COVID side, and those issues will be much lesser in Q3 and Q4. I think the plus minus of that will remain a plus. Have I been able to answer your question?
Right, sir. Sir, you have embarked on a very on an exercise of reducing material cost over next 2-3 years. Is it possible for you to quantify as to what percentage of sales? Let's say every year we may be able to achieve 100 basis point or 200 basis point. So some ballpark target over 24 months, if you can, help us to understand.
So we wouldn't want to give you an exact figure right now because there's a lot of work, WIP at this stage, but it's a very aggressive reduction. I can only share this because just to give you an example of the nature of reduction that we are chasing is, for example, if you see in the area of electronics, and we had made substantial localization about 2 years back, and now, in fact, the localization has happened in Goa. So we have a full-fledged electronic world-class plant which has started with a supplier. And what is happening now is that for us, the electronic component sourcing, instead of supplying to 2 product categories, front load and top load, now that source will also supply to AC. So there is almost a doubling of revenue in many of the electronic components, and the consolidation is leading to significant savings. We are attempting to complete the bulk of the exercise by Q4, and I think end of Q3 or end of Q4 we'll be able to give you firm figures, but they are very aggressive.
And sir, can you also help us to understand a little bit more on the salary front? Our salary cost YOY has still gone up. So any reason for salary cost increase?
I think the increase in salary cost you're saying is primarily because of the addition of the air conditioner operations. Otherwise, on a per person basis, it has remained the same.
Mitul, can I just say, but if you see YTD, September, it is almost in line with last year. Last year, employee cost was actually 14086. So these 6 months, it is 13952 actually. It is marginally lower. You see YTD 6 months period, I'm saying.
And on the air conditioner, the questions you'd asked, I will just answer them. The plant is fully stable now. It has begun ramping up for the season ahead. We have, let's say, 99% closed off the OEM supply orders, etc. So in a short time, we'll be sharing the details of that. With the changes in the duty structure and the ban of the ACs with gas, etc., the demand, of course, for OEM has increased. So in the current forecast, between December to June, the coming season, the plant is fully loaded. So I think we will get very good utilization of the facility in the season ahead.
Right. So earlier guidance which you gave on the volume side between own brand and third party manufacturing, we still go by that number, or there is?
Yes. No, it's the same. It's the same. The split is the same.
Great, sir. Thank you very much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Srinath from Bellwether Capital. Please go ahead.
Hi. Just want to understand, given that our demand is still kind of outstripping supply, just want to understand, are we running our plant at 3 shift and, incorporating social distancing? What kind of utilization or production throughput would we be able to increase given the festive demand?
So currently, the assembly lines are running in 2 shifts, and they are running with physical distancing. So we are not at our peak production as far as the manufacturing plant is concerned. We have evaluated the idea of increasing manning back to original levels and increasing volumes further. But there are 2 reasons why we have not done that. One is that the COVID-related issues remain a concern, and we don't want to increase the risk because we have some degree of control and the case incidences have reduced. So we don't want to add to the risk, at least not for the next 2 odd months. The second thing is that the supply chain stress remains. So in areas of electronics, there is a serious constraint on the supply side. This is better than it was, let's say, 2 months back, but it is still not back to original levels. So we expect that Q3 is going to remain stressed. It's better than Q2 in terms of supply side, but it will remain stressed.
Got it. And so inventory in our hand as well as the channel is really low, right?
It's very low right now. Yes, it's very low.
Got it. Just want to understand, going back to distribution, that we had a significant expansion in distribution, and we were monitoring the reordering speed of the newly added distribution. So we've had very strong sales numbers, and the fact that we are stocked out. Are you seeing any significant improvement in numbers coming out of the distribution that has been added in the last 4-5 years in terms of reordering?
Yes. So the spread of the sales has improved, and the extraction from the distribution network has also improved. There is a very large exercise that we undertook from the middle of June onwards, which I think we had shared in the previous call as well, which is appointment of salespeople who are essentially dealer personnel only, but we are incentivizing the sellout. That initiative is going well, and if we remain on track, by the end of this fiscal year, we would have manned a very high majority of the counters that are operating through distribution, and we expect a very large sales increase from that. That is an agenda for this next 2 quarters. But the results from June till October have been very encouraging.
Great. Last one from my side is just wanted to update on dishwasher situation. Have you been able to source more supplies? And if you could give some perspective about how the next 3-6 months looks like from sourcing supplies and the end user market.
So dishwasher remains very stressed, and our manufacturing location was Turkey, and Turkey has been very badly affected post-Eid. and the country has had multiple lockdowns, and very recently there was an earthquake as well, which was right in the place where the manufacturing facility is there. So dishwashers remain stressed. Currently, we have a backlog of roughly about 2.5 months of orders. I don't see that improving till December. Maybe in the fourth quarter there will be some relief on that, but right now it remains stressed.
Got it. Thank you. I'll get back into the question queue.
Thank you. The next question is from the line of Manoj from Equirus Securities. Please go ahead. Mr. Manoj from Equirus Securities, your line is unmuted. You may please go ahead, sir.
Yeah. Thanks. Sorry. So thanks for the opportunity and good afternoon to everyone. So first of all, I would like to touch on the supply disruption that you did highlight in the previous quarter con call as well. That there was a lot of supply disruption which impacted the sales for the company. So this is an industry-wide phenomena, or is it largely impacting us?
No, our understanding is that we actually had a tougher time as compared to the others. So August, we had almost 10 days of loss of production. And that continued in September. And October, we made a lot of recovery. But we lost sales in August and September. And our understanding is that it was more than others, primarily because of our testing protocols. The calls that I made to try and understand in the other locations, the testing that was being done was more based on, if you have symptoms, we'll send you for testing. Whereas we were doing very high level mass testing, including tracking systems, etc. And that led to a lot of loss of manning and shutdowns. So my answer is that I think we lost more than others.
Right. So if you look at now when you are saying that the things have been improving, so in Q2 we reported flattish revenues in home appliances. Do we see improvement in terms of growth percentages going forward in quarter 3 as things have been improving?
Yes.
And sir, during the quarter we reported somewhere around 45% plus kind of gross margins. So when you say like there are strong initiatives that the company has been taking on gross margins, now, is this the new base, and from here on there could be incremental margin expansion at gross level which could be expected, but this is the new base, and but normally, despite the input cost pressures that the industry would be facing right now, but these gross margins are very much sustainable.
Yes, they are. Yeah,
right, sir.
Yeah.
Right. And sir, in the room AC side, so if I'm not wrong, we had highlighted like roughly around 1.25 lakh units for our own brand and roughly 1.5 lakh units as an OEM. So this was the breakup that you gave earlier, right?
Yeah, in the next 12-month scenario, our capacity as installed is 500,000.
Right.
And what we have shared is that over 12 months, on a per annum basis, our attempt is that we reach about 250,000 of IFB brand sales and 350 odd thousand of the OEM sales. I think we are on track for that, basically.
Right. And so earlier, as per our understanding, room ACs was a loss-making business at operational level. So at least whatever visibility that we have in terms of our own brand and as well as for other brands, so this won't be a loss-making equation at least from FY21 and FY22 perspective.
That's correct.
Right, sir. And in dishwashers, what we understand that the level of discounting by the brands have been lowered significantly. Obviously, there have been a lot of supply constraints as well. But profitability has improved significantly, and also the demand perspective remains very promising. So how do we look at on a sustainable basis, like going forward, this market, the new market size that has been defined during this current fiscal year, is this sustainable or there should be decline in demand for this, and whether the margins that we would be commanding currently are those sustainable?
Okay, so it's an interesting question. I don't think we have a complete answer, but I will try. As far as we are concerned, it is not that we reduced discounting or increased discounting. The basic what is called as the marketing MOP levels for us were already very high, and they have remained the same. We haven't increased pricing per se from that point of view to the customer. The demand that we have been able to fulfill is about 5 to 6 times higher than our normal, and we are short. So like I said, we have about a 2.5 month order backlog which we've not fulfilled. So if we had fulfilled demand, the growth would have been that much more. My own view is that the largest part of this is actually a resetting of the base, because just to give you an example, let's say you have an area like Coimbatore in Tamil Nadu, and in areas around Coimbatore, which are the area markets like Tirupur, the so-called interiors, the change in the sales is, to the tune of 5 to 6 dishwashers a month to 55 to 60 dishwashers a month. So my own personal take is that it is a complete resetting of the base. So it is not as if there is any pent-up demand or the same city is buying more. Actually, the dishwasher is now selling in areas where it had not even been touched before.
Right.
I think that this market will remain as it is now, and the phenomena in India is that once it enters new markets, then one person buys, then the neighbor buys, then the two of them tell another person, the third buys. So I think this market will now grow at a very different pace from what it was happening earlier.
Okay, but if you look at in some of the other categories like microwaves, where initially there was huge demand and the market definitely redefined its base, but then again, if you look at the growth rates have been very stagnant. So can this be a scenario because of the supply constraints and huge demand, FY22 could be a more normal year, and any possibility or any visibility or any take you would have that FY23 onwards the growth should be very nominal despite lower penetrations?
In microwaves, as on date, also we have lost sales because we've not been able to supply, and these were issues at the supplier end in terms of manning, getting production dispatched, shipping, etc. Personally, I feel that even the microwave market has reset. Your specific question is 1 year from now, is it going to be like dishwashers? My answer is probably no. It might moderate a little bit. But even in microwave and cooking, I think there has been a reset, basically.
Right. Got your point, sir. Sir, that's all, sir. We'll get back in the queue for further questions. Wish you all the best for future quarter.
Thanks, Manoj.
Yeah.
Thank you. The next question is from the line of Abhilasha Stale from Dalal & Broacha. Please go ahead.
Thank you for taking my question. Sir, my question is for the REC segment. As we said that the new import restriction has opened, the opportunities for us. So are we in talks with any of those OEMs, and have we got any assurance as far as new supply is concerned? How big could be the opportunity, and how much we will be able to encash from that segment?
So the increased opportunity is in terms of more volume requirements from the people that we have closed the discussions with. And for us, the filling of the 500,000 per annum capacity has been helped by the decision. In terms of how the capacity will fill up, the figures that I shared a little while earlier remain valid. This decision on the import side will help us to reach that figure faster. That was the point I was trying to make.
Okay. Yeah. Thanks. And secondly, if you would, like for us, the washer sale was flat for the quarter, but how has the industry moved in the washer segment, particularly if you could just share, in top load and front load category, and how it is in Q3, like how are we seeing, on quarter-on-quarter basis, on month-on-month basis improvement?
So in August, we lost about 10 to 12 days of sales because of not being able to produce. And in September, it was about 7 or 8 days. So in total, it's roughly about 20 odd days of sale over the quarter. So we could have done that much more. We lost shares in August and September because we were not able to fulfill demand. And our understanding is that in October, we have gained those shares back because October our supply situation was much better. But we are still short of demand. So my own personal guess is that even in the current situation, we are short of demand by anywhere between 20 to 30%.
And so how do we compare it with pre-COVID level or on year-on-year basis?
The comparison with pre-COVID level?
Yeah. I'm asking about the demand overall.
The demand overall, my assessment would be on a category like washers, for example, is at least 30% plus of pre-COVID levels as on date. If supplies are made properly, that level could possibly be higher. But we have to be able to supply and then test it. But in washers, in cooking products like microwaves, there is a very clear reset.
Thank you.
Thank you. The next question is from the line of Aviral Jain from SG India. Please go ahead.
Yeah, thank you so much, sir. I have two questions. One is on the AC side. Obviously, any OEM arrangement that will have a step jump in your volumes, while your own sales would be more organic and it will be more a smooth curve. So would it be fair to assume that given whatever has happened in terms of import restrictions, the OEM jump could happen very immediately in the next 1 year itself, while the organic growth that you're projecting would take at least 2 to 3 years? Because right now we are almost at 85,000 units per annum on the AC side, own sales.
Okay, should I answer that now?
Yeah, please.
So this is a good question. The issue for us is as follows: that yes, the OEM demand is immediate, but the real profitability actually sits in the brand sales. The OEM volume will help to the extent that it will help to increase consolidation benefit, volume benefit as far as the sourcing is concerned. So yes, the demand for OEM is immediate, and the IFB own brand volume will take, let's say, from January to December to fully develop. But I think our challenge is to be able to do both together if we really want to, get the meat out of this investment for the company. I hope I've been able to explain this.
Yeah, sure. But you would still expect some 6 to 10% sort of manufacturing margin on the OEM business, right? Or more?
Yes, no, that sort of a margin will be there. But they are very slim. So, a little bit of material fluctuation here and there or a forex level change. So there's always a risk there. And for that, a healthy own brand sales is very important on the project. So while we do fulfill the OEM thing, building our own brand sales is going to be the top priority.
And what's the current, or say, for example, FY20 or FY19, what were the unit sales in terms of numbers for AC?
Sorry, could you just repeat that question, please?
So, were we selling around 85 to 90,000 units per annum say, last year?
Yeah, about 100,000, yes.
Okay, sure. So as a consequence, are you going to introduce a lesser premium brand or a mass premium brand, range of ACs to accelerate volumes, or you would still try to play on a benchmark basis versus a Daikin or a Mitsubishi? As in, how do you see
the range that we introduced, which really didn't see the market well because the pandemic struck, but it will now see the market, let's say from November onwards. That range is benchmarked to Daikin, LG, Mitsubishi. And what we are also doing from February, March onwards is to introduce another range, which is one step lower, which is closer to the heart of the market. So in the coming season, we will be running two ranges simultaneously. And the agenda, of course, is to drive up volumes as fast as possible.
Okay. Sorry, I have one last question on the fine blanking business. How is auto sales now panning out? There's a lot of press about pent-up demand and then the demand tapering off for the OEMs once the channel filling is done ahead of the festive period. Are you seeing some recalibration of numbers, or the numbers on a year-on-year basis and even on a sequential basis are still looking strong? And any change on the four-wheeler side, because for four-wheeler has been slightly softer than two-wheelers for IFB on the engineering division side?
Mr. Jain, this is Arup. I will take your question. Answering the first part of your question is, as far as the auto market is concerned, from September onwards, it is showing an upward trend. And October, November being festive months, it is bound to keep in this high level of volumes. But as far as the two-wheeler is concerned in this segment, had jumped the volumes prior to the four-wheelers. But the four-wheeler is also, the lower end of the four-wheeler segment is increasing in its numbers. So both the lower end of four-wheeler and the two-wheeler, the volumes are expected to continue going forward in the third as well as in the fourth quarter. December being a sluggish month, maybe little lower volumes, but the supply chain is stressed. The volumes, the stocks at different areas is low. So it will not be a normal December compared to earlier years, but it will be better off, and both the segments expected to continue its growth in coming quarters also.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Rahul Soni from Smith Limited. Please go ahead.
Hello. Yeah. Thank you, sir, for taking my question. Sir, my question is regarding your new plant. As you said, you have installed capacity of 500,000. I want to understand, this is based on a single shift or double shift, or also what is the realistic capacity utilization that we can achieve on an annualized basis?
Okay, so this capacity is based on the areas like press, shop, etc., all running on a 3-shift basis. And the assembly line originally was on a single shift basis. But in the current scenario, the assembly line will be operating on a 2-shift basis because there is physical distancing in place. At the current run rate, by let us say February, March, April, May, June, in these 5 months, I would expect the plant to be running to near 100% of the capacity, primarily because of the demand scenario. So if we talk about monthly capacity, we would be close to 100 or at 100, basically, given the present demand forecasts.
Okay.
So during peak season, is it possible to achieve more than 100% capacity utilization also if you are running on a double shift?
Yes. So, the number demand will be met through the suppliers making more, the assembly line stretching more. So those are the things that we will have to do. And this will be the first full season actually that the plant will see. And we will really be tested this season in terms of how much we can generate out of the plant.
Okay. And second question, sir, what is your current market share in the AC segment?
So our market share is very small. It is 2.5%. Currently, we are very low.
Okay. And sir, the OEM business which you have discussed before, what kind of margins you are targeting from the business?
So we would not want to share specifics, but you can always speak to Mr. Chatterjee separately. In terms of a vertical specific figure, we wouldn't want to give it on the call.
Okay. Okay, sir. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Anand Bindra, individual investor. Please go ahead.
Hello. Hello. Am I audible? Yeah.
Yes, sir.
Yeah. Congratulations, Raj Shankar Ray, for becoming MD and CEO of the consumer business.
Thank you.
And sir, congrats, sir, for good results. Sir, wanted to check with you, what is the supply side issues of components for AC business AC may face in the first quarter?
Currently, on the AC side, our primary challenge is on the electronic sub-components because those supply chains have got very stressed globally over the last, let's say, 4 to 5 months. So in terms of ICs, in terms of simple components, in terms of the bare board of the controller, all of this is very, very tight, basically. So what typically used to sit as an inventory for 3 months is now down to maybe 2 weeks, 3 weeks. So there's a big stress there.
Okay. So do you see any concern, sir, if we lose market share in AC also or not able to produce because of the supply side issues in components business, components of AC?
So currently we are planning not to lose sales. Do we have everything under control? The answer is a no. But we are in November, and our attempt is by December or early Jan to actually stabilize all the procurement-related areas. But there is a stress.
Given the fact that there is a change in AC policy, would you like to revise your target for doing more AC sales in primary business? Because obviously you are in a positive side because you have a manufacturing capacity ready as compared to competitors who would be struggling to find finished goods. So earlier, sir, you gave a projection of 1.5 lakhs. Can it be revised, of course, for this season?
We think that there is an opportunity here. I wouldn't want to sort of commit on that, but we are trying that. And of course, the policy is helpful to us, basically.
And sir, for the January to June, how much AC we can produce? So our annual capacity is 5 lakhs. January to June, how much we can do, sir?
So if you look at, let's say, 500,000 divided by 12, then the annual capacity comes to roughly about 40,000 basically per month. In January to June period, we are trying to reach a capacity of 50,000 a month combined.
So around 3 lakhs AC pieces.
That is the capacity that we are trying to reach, and how much we'll deliver out of that, we will know in terms of how much we are able to stabilize the electronics before mid-Jan, let's say, or early Jan.
Okay. And so, but sir, other than compressor, is there any product where we are dependent on imports?
electronic sub-components are imported.
Okay.
So critical ICs, resistors, a lot of the electronic critical components are imported.
Okay. And sir, coming back to dishwasher, do you foresee a situation where you would like to put up a plant for dishwasher, given the fact that it is 100% imported country?
It is an evaluation we are doing, but we don't see any immediate move towards an investment in dishwashers. It is an idea. The IFB used to make dishwashers many years back. So IFB has experience of dishwasher manufacturing. But given the fact that we made the investment in the air conditioners and there are requirements of investments into existing businesses for new products, etc., we will be studying it, but I don't foresee an immediate investment in dishwashers at this stage.
Okay, sir. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Manojji from Equirus Securities. Before that, I would like to remind participants again, if you have a question, please press star then 1. Over to you, sir.
Thanks a lot. Sir, my question would be if you look at currently whatever sense we are getting from our channel checks, secondary sales continue to remain very robust for washing machines and other categories. So obviously when we look at our primary numbers and home appliances business, there seems like at least we have lost some market share owing to this supply disruption. So do you expect this market share that we have lost, that we could have lost, we would be regaining that in the coming quarters? And what makes you believe this?
So we have lost market share in July end, August complete, and September the first half because of the stresses we had. In October, we've got a lot of it back, and we will get the market share back. And the reason I'm saying this is that the loss was primarily on account of not being able to supply. So the demand was there, the orders were there, we couldn't fulfill. And now that we've got back availability, the demand is still there. So even now we are running short of demand, basically.
Right. Got it, sir. So secondly, if we look at few years back, South used to contribute roughly around 45 to 50% of overall sales. And we focused a lot on adding new touch points in the non-South markets as well. So currently, what would be the mix of South versus other markets?
South is still around 40% of our sales. And this will change with the growth of the ACs, because the AC sales will come primarily out of markets like the North. So whereas for a washer segment, the South remains the biggest, but for air conditioners, the North will become the biggest. So on a company level, you will see a change in terms of geographical mix because of the product category getting added. On a category basis, the geographical distribution, I think, will remain the same.
Will remain the same. Right, sir. Right. And sir, regarding your room AC, so most of the components, as you highlighted in the previous question, so apart from some electronic subcomponents and compressors, most of the components would be done through in-house manufacturing?
So we are doing the heat exchangers in-house.
Yeah.
We are doing the process areas like painting, etc. in-house. Assembly, of course, is completely in-house. So the bulk of this is inside the plant. Now, other than that, electronics, plastics are all in Goa within, let's say, a 10 kilometers distance from the plant. So they are the extensions to the plant. What is coming from outside would be, things like the compressors, raw material, those aluminum sheets with which we convert to heat exchangers, copper, those sort of things would be coming as imports. And that is true for the industry as well.
Right, right. And the motors would be in-house, right?
Motors, as a result of the motor project, will be in-house, but that will be 12 months from today. So we have Anand also on the call. He can brief you about the motor project that is underway. Anand, are you there on the call?
Yeah.
you can explain about the air conditioner motors as well.
Okay. On the air conditioner motor, we are investing on a million capacity line which will produce BLDC motors for in-house consumption as well as for outside customers. And the investment will happen within the next 6 odd months. We have already released the orders, and the plant is getting ready in China. The plant should be working from, say, next July, August onwards.
And what would be the total investments we would be making behind this?
For the motors, we are planning an investment of around 32 crores.
Right. Got it, sir. This was very helpful, and thanks a lot once again.
So if you remember, Manoj, in the previous call also we shared that in terms of the drives for the washing machines, in terms of the next generation of drives as brushless DC and the drives for the air conditioners, the motor investment will actually open up an opportunity both for in-house as well as supplies to other players within India, because motor per se is not a product that is made in India. Everything is import currently.
Right. Do understand, sir. Thanks a lot, sir. Sorry.
Yeah, and this is the appliances plus automotive motors combined, basically, which was also an investment that the company made.
Right, sir. So that makes extreme positive outlook for the company, and wish you all the best, sir. Yeah.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investment. Please go ahead.
Yeah, sir. Thank you for allowing me. Sir, the dishwasher category, currently, what sort of volumes are we doing on a monthly basis? And secondly, are we making money on this dishwashers, or we are kind of just making, even given the fact that it's a complete imported product for us? And my last question is, sir, you did elaborate on this whole material sourcing exercise. One, can you help us to understand that what different are you doing now versus 12, 15 months before? And secondly, what is your overall outlook on the raw material prices on your basic copper, aluminum, and so on and so forth? So just help us to get a little more understanding on these aspects, sir.
So I'll answer the question on the material cost first. What was done is that in the month of April, we just took a top-down target that we have to cut material cost by X. It started like that. And what we had not done before, we were doing, detailing in areas of localization, etc. But we had not gone after each component-wise possibilities in resourcing and therefore generating savings. And in the month of April and May, the largest opportunity that opened up was combining the supply chains of ACs and washers and being able to extract more because of the increased opportunity for suppliers. So whether they are at sub-component level or at aggregate level, the introduction of the air conditioners has meant a sizable increase in business. And this is something that was not there before the AC investment started. So what we've been doing since the month of May is that we've been going line by line, component by component, looking at resourcing opportunities and driving consolidation benefits. And this exercise will finish by Q4, and that is a very large saving that we are seeing.
So is it fair to assume that this whole, foray or investment into AC is kind of helping us in a very big way as far as the washers are also concerned on the material savings?
Yes. That is what we have experienced in the last 3.5 months, that the opportunity opening up is quite significant.
And this was not thought before when we started putting up an AC factory.
So this was not in the original project calculations. There was, of course, an understanding that this will help, but the real figures and the fact that you've had this pandemic and it has allowed time and driven thinking in a much more structured and we've just thought differently. I mean, we have to acknowledge that this pandemic has also offered an opportunity to just relook at everything, and I think we are getting a lot of benefit out of that.
Sure. And your outlook on the absolute raw material prices?
So the absolute raw material prices in this quarter in plastics and metals have risen, but my understanding is that it is more of an opportunistic rise because demand has increased, people have increased prices. I think from quarter 4, it will stabilize. It will come down slightly and it will remain stable. I don't see in the medium term or short term any dramatic increase in raw material prices happening.
And sir, just a question from a medium to longer term, let's say over 2-3 years. Since we have embarked on a lot of cost initiatives, of course, the overall market is also helping us. Pandemic has helped us. This whole AC manufacturing plant is helping us. So from a longer perspective, is it fair to assume that now, we would be on a path of a far more profitable growth than what IFB used to deliver 2 years back, or last 14-16 quarters, where we were significantly impacted by many factors. Now, is it fair to assume that more or less we are kind of set to deliver double-digit EBITDA margins on a fairly consistent basis and be extremely value creative for shareholders and for everybody?
Yeah, so the answer to that is yes. We wouldn't want to give a clear forecast on this, but given the experience over the last 3-4 months, the answer is yes.
Okay, great, sir. Congratulations, Mr. Rajshekar, and we wish you all the best. We hope to
Thank you.
That you deliver on all your promises.
Thank you.
Thank you. The next question is from the line of Gopal Govindar from SBI Life Insurance. Please go ahead.
Hello, sir. Thanks for the opportunity. I just wanted to get your sense on this, how competitive we will be in the AC market with the 5 lakh capacity, and will we be able to, match the prices of leaders like Amber and all? And in terms of the client sourcing, whether it will be the larger brands or it will be like, the tail of the market which will be targeting.
I don't see us being competitive to Amber on a cost-to-cost basis, but because they are very efficient OEM players, I don't want to take that away from them. But the way we've tried to arrange this is that we have taken a higher product quality and feature position.
Okay.
And the response that we have got is that there is a market for all products, all price points. So we have stayed away from the low-cost, low-feature segment.
Okay.
And our attempt has been to showcase the technical strength of our product and the features it has. And for that, we have received a response. So I don't see us going head-to-head on the OEM segment the way you would expect. We will stay at this higher position and look for volumes there.
Right. And in terms of our targeted customer, it will be the larger brands only, or will be targeting the tail?
No, we will be targeting the major players in the market.
Okay.
In the next quarter, we'll be able to give you very specific information on that.
Okay. So what should lead these? There may be some already some tie-up, either through Amber or some other player, or they must be doing some in-housing. or might be imports? Why should, one shift from that sourcing to, you?
People would shift. I would not want to answer the question of why people would shift, because we don't know the mind of the buyer in that sense. But what we are offering is a good product at a competitive price for the product that we are offering, and to that we have received response.
Okay, fine.
To where they're coming from to us, or are they coming from somewhere to us, that we don't have that insight yet. So it's difficult to answer that.
Sure. Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Aviral Jain from SG India. Please go ahead. Mr. Aviral Jain from SG India, your line is unmuted. Please go ahead with your question.
Yeah, thank you so much for taking my questions again. My question was more in terms of margins. So, as in while Mr. Ray, you answered my question that the margins on the OEM business would be say 5 to 10% range, but how, as in given ceteris paribus, what sort of margins and what sort of return on capital can you expect purely from the OEM business if you were to set up the same plant just for an OEM supply?
Yeah. So Aviral, my request is, instead of an answer on a very specific segment like this, you could speak to Mr. Chatterjee, and he could give you some insight on this. But we wouldn't want to comment on a specific segment question like this. What I can say is that how the OEM, our understanding is that it is bringing plant utilization, and therefore the overhead spread gets addressed. And the second is the volume of the OEM is helping us to actually lower material cost overall. So let's say between a 250,000 and a 500,000, the component buying is double, and that automatically has a reduction in the purchase prices. So that is how we are trying to balance it. Would you want me to answer anything else on that?
No, I completely get the economic logic behind more economies of scale and more efficiency that you would get in terms of your overhead being spread over a larger volume. Completely get it. My only point was that is OEM on a standalone basis cost competitive from a return on capital standpoint? As in, would you? Yeah. So that.
Yeah. So the answer to that would be a no, because the kind of product that we build and the facility that we build cannot have a healthy ROI in terms of just a OEM play. And that is what I said a little while back, that to have a healthy IFB brand sales is very important from the overall project point of view. And that is what we have to deliver while we actually fulfill the OEM demand.
So is it fair to say that the product profile is different for what you would be manufacturing for your OEM customers versus for your own brand?
It's similar, and which is how we position the product, that it's a better product, and there are people in the OEM segment who want that product. It's not a different product in that sense.
And there is concomitant demand for your OEM customers, as in they have enough market share for you to be able to easily fill up the capacity.
That is the understanding we have right now, based on the discussions which are at a very advanced stage or close to finalization.
So one last question. So is it going to be a take or pay sort of contract?
What is that? Take and pay?
Take or pay means so you have committed certain amount of supply or your manufacturing capacity, and if they don't give you enough orders, then they would still need to give you some compensatory margin.
No.
Supply.
No, that is not there. Okay. No, that is not there. They will pay for what they take.
Okay. So thank you so much, sir.
Bye.
Thank you. The next question is from the line of Srinath from Bellwether Capital. Please go ahead.
Hi. Just want to understand, in some of the previous questions on ACs for our own brand, you had said that we're looking at two ranges operating at different price points. Could you please elaborate on what is the strategy for this summer, especially with two ranges and some, to just give an understanding of how we're positioning or pricing the product versus, say, one range would be against the, mass premium category, where you will have the likes of Voltas and the other would be with the Daikin. Could you give us some feel of our approach towards the IFB branded AC business for the coming summer? Thank you.
So the two positions we are trying to build up for the summer is, one is the range that we currently have, and that range is positioned high. It's completely feature loaded. We've benchmarked it to the best. And then by around February, we are introducing a second range, which will be one step below, closer to the heart of the market. And so you have these distribution networks or smaller dealers that we have, who are more accustomed to selling ACs at different price points. So the second range is to address that segment. And therefore, while the IFB brand gets positioned with the range that we have currently, a segment of the volumes will also come from the second range through the smaller dealers, distribution networks, etc. That is the present plan that we have.
Okay, got it. This goes in line with the fact that we have made two different, AC products itself or platforms. So one would be coming from the premium platform, and the other platform would service the.
Yeah, so the platform essentially remains the same, but the specification of the output performance is different, if I can put it like that.
Got it. It's a slightly more layman question. Can the washing machine plant also start some form of dishwasher assemblies, because there could be some overlapping parts or products. So just wanted to understand that for dishwasher, if we do Fathom, do we have to put a completely new setup, or can some of the washing machine setup be extended to the dishwasher range?
If you were setting up a new plant, for example, some parts of the assembly operations could be combined. But in terms of the aggregate inputs, the two are very different products. So, for example, you could have a sheet metal line that is the same. But in terms of the actual putting together, the dishwasher has some very special insulations inside the cabinet, because when the dishwasher runs, you don't hear anything. But there's a lot of noise with all the water splashing around, etc. So to insulate all of that, there are some very special features which are required. So you could have some degree of commonality, but by and large, it's separate. And for IFB specifically, the washer plant is currently extremely loaded, and it would probably remain like this for a long time. So even if IFB were to get into dishwashers, it would be a separate facility.
Got it. And a last question from my side is, in the last call, you had said that the preceding 2 years, the broad customer profile and what had happened in Q1 is you had a slightly more different customer profile from the nature of sale to the type of buyer and so on. Could you kind of revisit that for us as you see trends in this last quarter and this quarter as to what are the subtle changes in customer profile that you are seeing? Thank you. That's all from my side.
So that's an interesting question, and that change that we spoke about in the last call, that has accelerated even more in the previous quarter. So the acceptance of a dishwasher, for example, from a market that it might have taken another 5 years to appear in, the growth for fully automatic washing machines in Tier 2, Tier 3 is very high. It's much higher than what it was, let's say, before February and earlier. And there is a definite reset of the consumption pattern. So whatever change we discussed in the previous quarter, that has actually accelerated in the last 3 months.
Thank you.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investment. Please go ahead.
Yeah, sir. My last question pertains to Ramson that we acquired about a year and a half back, 2 years. It's been now almost. We don't have any update on that piece, particularly, what is happening. Is the factory operating at optimal capacity? How the fixed cost is kind of, not helping us at this point of time. So can you just tell us what is the situation there?
So the factory is operating at a suboptimal capacity. And this is an area that we have not done a good job in. And the sales have been affected by the pandemic. So in terms of orders from hotels, restaurants, they have just gone to zero. The orders that we have now are coming from pipelines like hospitals and smaller residential guest houses kind of setups. But we have to do a much better job at sales of that product category. And today, that is the area on which we are working. Whatever we are selling today, the potential is much more.
So how much are we selling there? I mean, any number? What is the sales in Ramson? Because I believe that, in the previous call, we have gone on record and saying that the opportunity is fairly large and, we can do 500 crores of sales with double-digit EBITDA margin. So just wanted to get some sense as to where we are currently in terms of sales.
Yeah, so the profitability is very high. You're right in that. And currently our sales are low. So this year, with the impact of the first 2 quarters, pandemic, etc., we will probably end up at 40-45 crores for the year. The opportunity is large. The number that you took is a possible opportunity, but we have to improve our sales effort to get to that number.
So is it making a loss currently at this suboptimal operation?
Yes, currently it is not profitable for us.
Not profitable. Okay, sir.
Thank you. The next question is from the line of Aviral Jain from SG India. Please go ahead.
Yeah, thank you so much. This one, I had a question on the motors division. So right now the motors division apparently is very small, but say 2 to 3 years down the line, what are the plans as in how much of motor production would be internal consumption basis the demand projection, and what would be the external sales on the motor side, including the automotive motors? Because there could be big opportunity once electric vehicles come in 2-3 years down the line, and even in the current powertrains and the internal combustion injection powertrain, there is enough demand. So could you throw some light on the motors division, please?
Yeah, Anand here. See, actually, the internal sales versus external sales, if you see today, the appliances is completely dependent on internal sales, whereas the automotive is completely outside sales. Going forward, when we start our BWC motors for washers and the air conditioners, we plan to have a 50% sale outside the group and then 50% for internal consumption. Coming to the EV, we are still exploring that market, and probably within the next 6 or 9 months' time, we should be in a position to make a project report and then make our strategy on the EV motors.
So can it become like a 50 to 100 crore or say 80 to 100 crore sort of external business for us 3 years from now?
Definitely, yes. In the next financial year, that is 21-22, we can have a sales of around 150 crores.
Okay. And how big is it today, sir? As in if I were to take a FY20 number?
Today, this financial year, probably we will close with, say, around 75.
Okay. Sure. Thank you so much, sir.
Thank you. The next question is from the line of Manoj G from Equirus Securities. Please go ahead.
Yes, sir. Sir, just one last question. So if we look at going forward, as we discussed on gross margins, so our IFB branded gross margin will continue to remain intact, and obviously this is the new base. But because of the OEM manufacturing that we would be doing in the coming quarters and years, optically the gross margins would look lower. But as said, like IFB gross margins might be intact, but optically because of the OEM sales, your optically gross margins might look lower. Is that understanding right, sir?
Yes, Manoj, you're right. But if you want some more specific discussion on this, then I think you could talk to Mr. Chatterjee offline. But the way you put it, yes, the gross margins in OEM are definitely not going to be equal to the IFB brand.
Right, sir. Got it, sir. We'll talk to you separately. Thanks a lot, sir. Yeah.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to Mr. Chirag Muchala for closing comments.
Yeah, thank you. We thank the management for taking time out and sharing their valuable insights on this call, and we also thank all the participants for their presence.